Hi and very welcome to an update from last week's Treasury Peer meeting in Frankfurt. One of the main discussions was around banking relationships and especially future banking landscape, which was part of an extensive benchmarking exercise conducted by Treasury Peer.
Yes, bank relationship is adjusted to a new normal. Be flexible, your place in the bank list may change abruptly. It's not written in stone. Banks may change a preferred client list without any prior warning. In fact, bank funding cannot be relied on. Prepare for the worst, hope for the best, and be opportunistic. And again, thanks for all the input for our benchmarking on future banking landscape. Some takeaways. There is a great uncertainty about the financial markets and also the unintended regulatory consequences. The costs of many transactions will go up. We need to understand why for the negotiations. Treasury policies will have to be updated to adjust to the new normal, and maybe even business models will have to do that.
Further on, cash forecasting is now becoming a core of corporate treasury. The financial crisis, credit crunch and new regulation have enforced focus on cash.
Yes, key success factors are discipline, high organizational visibility and thorough, regular deviation analysis. An interesting point that came out was that in cash forecasting a conservative approach is not desirable. That is, payments should not be overestimated, income should not be underestimated as they usually are in, for instance, sales forecasts.
We also found that investment management is an integral part of Treasury, requiring new skills.
Yeah, the economic uncertainty and political decisions have led to a rapid deleveraging and hoarding of cash on the corporate's balance sheets. Where to invest the cash? And what are the consequences of a possible mispricing of supported and overregulated assets, for instance, sovereign debt, bank and real estate debt? Again, investment policies need to be revisited. Where to invest the cash, or is the legacy view of market and credit risk still valid?
There was a lot of discussion about strengthening the supply chain. And Magnus, can you elaborate on this?
Yes, supply chain programs we've been discussing for years. And they are now becoming a necessity in many regions and industries, and risk to be the main source for of funding for the suppliers. Strengthening of the supply and demand chains will probably be a recurring theme in our roundtables and require substantial development of the business. Basically, we have to take care of our own.
Another underlying problem we realize is the pension systems, that they are in a perfect storm, and it is yet another area where EU integration has failed, pushing the burdens on corporates.
Yeah, from a pension manager's perspective, longer life expectancy is not a good thing. Low returns neither, and that the cost of administration is very, very high. We will return on this subject with another video very shortly.
We were also discussing several economic and external factors influencing us.
Yeah, as I said, the concern of global imbalances remain. And one thing we should consider is the view from the US on Europe, and we have to take that seriously. Will any US investments be channeled to the EU EMU? One can ask. Another thing we are discussing is EU EMU breakup scenarios, how we can mitigate what they are and what they are. The third one that is becoming more and more evident is intrusive bureaucracy. The bureaucracy increases and becomes more and more intrusive, which affects corporate competitiveness.
Okay, thanks a lot for 2012 and thanks for your support from all over the world. 2013 is the year of expansion for Treasury Peer, and we have already 5 meetings planned so far in 2013. So, see you and stay in touch.
Stay in touch.